economics. Now, before we begin, let's just get some stuff out the way. 95% of retail traders out there, I believe, can't even name more than 5 central banks. In my 11 years of experience, I've seen that 9 out of 10 traders most likely can't even tell you about interest rates. And because of this, I feel 80% of traders stop trading within the first 2 years, if not sooner. And like my favorite car analogy, I believe technicals is knowing when to steer left and steer right, but fundamentals is what's really happening underneath the engine for the car to move forward. And it's essential that you guys know that. Your whole goal should be to stay in the game as long as possible. How you're going to do that is by knowing how the markets actually work and how to prevent as many losses as you can. And overall, I believe 95% of traders do not really understand how fundamentals work within the FX industry, and we need to change that. And I'm here to tell you that macros move markets, and it's essential to add it to your game. And as you guys probably know, it's an endless and pointless debate of what's better, technicals or fundamentals. I'm here to tell you that both are essential. As we know, guys, price is key, and price is always right. That's never going to change. However, a lot of people are very incorrect about their theories of fundamentals and nearly have no idea how macros or fundamentals even work. Most traders think that fundamentals are just for the long-term game and long-term outlooks and bias of the markets, which is totally incorrect. I'm here to tell you that you cannot be a successful trader year on year by just using technicals or even just using fundamentals. You need both. And the reason for this that you need both is because they both give you something very, very special. And together, they are very essential. Now, I'll tell you, I used to be solely a technical trader. And being predominantly a technical trader, I used to look at all the levels that you guys look at right now. Fibs, trend lines, moving averages. I've used every indicator known to man. I solely relied on technicals. And I thought I knew a little bit about fundamentals, but looking back now, I didn't really know anything. I didn't really know how central banks even worked. I didn't really know what emerging markets were. I didn't really know what an important key China plays to everything. Keys of a global economy, forget GDP, forget retail sales. I didn't even look into any of that. I simply thought fundamentals was just non-farm payroll. And that's what's really holding my trading back. Now, I'm telling you, you don't have to be an expert in both technicals and fundamentals. And I'll still say right now, my technical experience outweighs my fundamentals and my macros. But I am here to tell you it's important that you need both. Now, this is probably one of the most important things that I'm going to say in this video. And I really need you to take what I'm going to say and apply it to your trading. And that is that macros move markets and technicals define risk. Let me say that again. Technicals don't move markets. Macros move markets and technicals define risk. And in this video, I'm gonna show exactly what I'm on about. That's right, guys. Technicals do not move markets. And I've been there before. I've seen the price leaning against a level, say a level of resistance. And you will believe that this level will potentially hold due to it being strong technically. So you enter a sell position. And after a few pips profit, you find yourself seeing a massive 70 pip move against you to the upside, breaking and completely destroying your resistance, causing yet another unexplained loss. Now, this loss you will most likely blame on fundamentals, just like I used to. But the sad thing is we know nothing about it. So again, guys, macros move markets, technicals define risk. Now, another thing is, all institutions, whether you're a hedge fund, whether you're an asset manager, whether you're a bank, you always need to use a stop loss. And anybody that tells you that they do not use a stop loss on an institutional level either does not know what they're on about or is simply lying. So here's another thing, guys. I'm going to talk about stop losses just for a minute. Because whether you're a hedge fund manager, a bank, or an asset manager, you always need to have a stop loss. Anybody that tells you in the institutional world that they're not using one either doesn't know what they're on about or they're simply lying. You can use a 50 pip stop loss, 150 pip stop loss, but the goal of technical analysis is to always manage and measure our risk on any particular trade. I'll say that again. The only reason we use technicals is to help us define risk. And people usually think of a stop loss last, which is intriguing to me. I think it should be the first thing that we look at because that's how we define our risk. So if you're a technical trader, Let's go into the difference between technical traders and fundamental traders and see the importance of them both very quickly. There is a such thing as a qualification in technical analysis in which you can receive. There's people who call themselves technical traders, but let's be honest, they're just chartists. And chartists for me are the people that usually say, I can break down any chart at any time, you know the people I'm on about. But when it comes to pulling that trigger and managing the risk, they can't do that. And this is for me, I'll always tell you that technicals is like your DNA. Everyone sees it in a different way. It's like kicking a football. You kick it many different ways. Whether you're shooting a basketball, everyone has their own slight formula that's different. And when I'm on the trading floor, I often see that there could be 10 traders that all have the same long bias on euro dollar. But every single one of them has drew their technical analysis, their support resistance slightly different. And that's technicals. It's in your DNA. But I'm here to also tell you that you need macros in your life. It's essential to be able to take on the financial markets. Imagine not knowing how the financial markets work and trying to take them on. So let's give you the correct introduction to how macros work. So guys, you think macros are boring, and so did I until it completely changed my trading. News figures, data trends of a country, most importantly, how does every day the dollar react to everything? I'm going to make this fundamental course so easy for you to understand with all the essential things to actually show the best results in your trading. I'll be explaining to you how GDP is split, what CPI is, what is transitory jobs, how are wages important versus unemployment, what is ISM, what is PMI, central bank policy, guys. I'll be explaining all the market sentiments to show you the beast that macros is. I'll be explaining my own risk on, risk off strategy that I apply to the markets every single day. So now behind me, I have two breakdowns showing you how important fundamentals can be along with your technical analysis. Let's go. So guys, I'm going to show you two examples, two really good examples of how fundamentals will be essential alongside your technical analysis. So let's start with this one. Going back to January 2015, when the Swiss National Bank removed its peg against the euro, Euro-Swiss plummeted, Swiss franc rocketed. How are you going to predict technicals on that? You simply can't. The move has happened and the technicals were removed. So let's go back to this point here. This is where that depeg happened and the market fell over 2,300 pips. That's right, purely a fundamental move. So what point do we apply technicals to this? Well, after this move happens, we need to see how much the price will retrace. So let's just get our fib tool and draw it on from the highs to the lows, and we can actually go ahead and now use technicals back on the markets, because guys, when fundamentals happen, technicals vanish and disappear. When the fundamentals finish is when technicals come back into the markets, as you guys can see. So now guys, I'm going to show you my favorite trades from this year. A dollar CAD trade, which was over 500 pips profit, and you wouldn't have had to change your bias once, keeping trading so stress-free and simple. So here it is. It was trading at 126 earlier this year. Now, I knew from a technical perspective, many traders, many retail traders were thinking that this level here would hold as a support level, and we're going to see dollar CAD trading a lot higher. However, knowing fundamentals the way that I do, it was the biggest growth year Bank of Canada had ever seen, especially after the pandemic. With pre-pandemic jobs recovered, inflation hitting a record level above their 2% target, we saw Bank of Canada start their taper, being the first central bank to start tapering. And if you don't know what tapering is, in this video, of course, guys, I'll be breaking it all down for you. But going back to this, so this gave me the strength that I needed from the Canadian dollar against the US dollar, making it plummet not just for one day, but for several weeks, giving us multiple opportunities to trade us to the downside. Now, I personally took this short from 126.250 and rode it for over a month down to 121. That's over a 500 pip trade, which was probably the best trade for me personally this year so far, which was both fundamentals, riding it down to my technical levels. And so where most traders every single day would have thought in this market, is it long, is it short? My bias wouldn't have changed for over a month. Again, going back to creating stress-free trading and making it so much more consistent. And that's how you apply both technicals and fundamentals into the markets. And over the next 15, 16 plus videos, I'll be explaining to you exactly how macros work with opportunities like this, because they're in the markets every single day. And it's not overwhelming, it's not difficult. I'm actually gonna make it very fun for you guys and enjoyable to watch. So you actually finally learn how to trade the financial markets properly.